SOFI stock is down over 11% after reporting their Q1 earnings. Is this the buy the dip opportunity a lot of people have been waiting for, or is this the start of another bank collapse? We'll discuss that on today's show. What is going on, investors? Hopefully, you guys are doing well out there. SOFI reported their Q1 earnings over the last year. Stock's down about 15%. Over the last 5 years, the stock has really just kind of been a straight arrow down, although there's been some volatility in this one. Talk about this from a technical perspective, but some very interesting things going on over at SoFi Bank. We'll take a look at the loan mix. Obviously, this company has really changed its loan mix. It's changed its business model, now taking deposits as it acquired a bank charter about a year ago. I want to point something out on the conference call as well. A lot of questions around the company's personal loan business and the response from management and the reaction from the market tells me a little bit that the market doesn't believe what management is smoking, and we'll see which one comes out on top in the end. We'll obviously jump over to the financials as well. I have Twitter up as well. Not exactly sure why. The Q1 numbers came in. $460 million of revenue, up 43% year over year, as this company is still lapping what I would say a relatively easy comps from a year ago. It beat expectations, beat on the top and bottom line. We got a $5.8 billion market cap on this one, although that is likely trending down. Now, for the Q2, we also got guidance from SoFi expecting revenue to come between $470 million up to nearly $480 million. Consensus estimate was for $463. This company gets, I think, somewhat kind of sandbag type guidance from the analysts. They often kind of beat and raise these types of things. It's really the devil's in the details with these types of things. You can't just look at the top line beat and maybe even revenue estimates and if they beat them or they're not, or even the Q2 guidance, the fact that it's decent. It's really all about the details win these banks. And look, over the past year or two, this company's really changed its book of business. It was big in student loan refinancing, and obviously the current administration has, for lack of a better term, Joe Biden's administration has screwed up student loan refinancing business. Take it for what it's worth. Now, home loans, as you also know, the company was doing pretty decent home loan business. It was really steady, kind of, like $800 million business, and then it's really been cut in half, and now all the way down to just $90 million of home loan originations. Now, the home loan business is obviously secured against the value of the house. The student loan business, I guess you could say, is tied to future revenues from somebody that has a college degree. This company has piled into personal loans. It was an $800 million business for them in Q1 2 years ago. It ballooned to a $2 billion business a year ago, and it has steadily continued to creep up, and now it was over nearly a $3 billion business. So this company generated in the most recent quarter, when you factor in student loans, personal loans, and home loans, $3.5 billion worth of loans. Nearly $3 billion of those happen to be personal loans. And as you may or may not be aware of, personal loans carry some of the greatest credit risks because it is not tied to a car, which they would come repossess. It's not tied to a home, which they would come and repossess. Student loans and personal loans are not really tied to anything. I guess they could maybe threaten to come take your college degree. That would make those student loans very well secured at some point, but they're not doing that. Obviously, personal loans, you could simply walk away from these. Nobody's going to go to jail. All that happens simply is your credit score drops. Now, the company on the company conference call, I have the transcript of the conference call and I read through it, and the first 4 or 5 questions that were asked of management was about the personal loan portfolio and how the management felt. And I thought they actually gave a pretty decent answer to this. And this is management saying that they target kind of the loan losses over the life of a personal loan to 7 to 8%. So that means nearly 1 in 10 personal loans that this company originates, they actually anticipate not getting paid back. But even if that happens, even if they get a 7 to 8% loan loss on these personal loans, that would still give them their target 40 to 50% variable profit margin on these products. And the company is saying that right now, the annualized charge-off rate on personal loans is just south of 3%. So the charge-off rate on their personal loan business could actually double, and it would still put them within their target of that charge-off rate. But as you know, the stock market is not about over the last year in terms of charge-off rates. It's really about the future. And I think the violent reaction in shares of SoFi down about 10% during the regular trade is based on the fact that their businesses almost strictly relied on personal loans. And if we go into a recession, whether it's a small one, whether it's a deep one, whether it's a real deep one, company like this might experience lots and lots of charge-offs. Now, we get over here to the financials, and look, year over year, it's going to just be spectacular because, again, the company is still lapping, kind of building up their traditional banking business. So you have this interest income, which over the last year has essentially tripled from 118 up to 371. Interest expense, the reason why this business is so attractive because it's very much like a traditional bank. They're taking on deposits and they loan that money out off of 371. You have interest expense just of 135. It gets you net interest income of $236 million off of $371 million. So I tell you what, here's the bull case argument, right? Okay, so the bull case argument for SoFi, if you're going to make one, is the personal loans, and they talked about it on the conference call. They're loaning or they're lending these personal loans to, a higher tier borrower. Okay, it's like over a 700 credit score, average income's like $100-something thousand. So your bull case argument is the personal loans don't go to crap. And eventually the student loan business comes back, whether you get a change in administration or you get a change in policy that allows that to happen. And then eventually home lending comes back as well. You get a stabilization in rates, let alone a rate cut, and that business can come back. They probably could get into the refinance business as well if that ever comes back. But that's your bull case argument. They're on the non-interest side. They're still originating loans and selling them. They have some servicing, some other technology products as well. Their total net revenue, if you include both business models, is about $472 million. Ironically, very similar net interest income and non-interest income. It's basically 50-50. This bank was actually far more non-interest income. Now it's 50-50. My guess we'll look a year from now. It'll be 60-40, 70-30, somewhere in that range. Now, here's the deal with this bank. Unlike JP Morgan, which can buy pretty much any bank that it wants, and it's showing that this morning, this company is not profitable, at least from a GAAP perspective. Technology and development went from 81 up to 117. Not bad. Okay, remember that this company grew their revenues 43% year over year. So you're going to expect increases on these non-interest expense. Honestly, it's not as bad as I thought. And what we also saw was kind of a peaking, if not a flattening of the G&A line from 136 down to $123 million. Our total expenses went from 440 last year up to 508. So not bad, honestly. Your losses before you pay some taxes was $36 million, a vast improvement over last year when you lost about $109 million. The last thing that I do want to show you, and that could have some analysts, some investors concerned a little bit, is here's your good old provisions for credit losses. Those actually went down from 12.9 to 8.4. And again, this is on a book of business that has swung drastically to the personal loan side, which again, the company admits has a 7 to 8% kind of target loss on that, and they have set aside just $8.4 million in the most recent quarter. It's not the total number, but just in the most recent quarter, set aside just $8.4 million. That is going to have some analysts and some investors potentially. And look, this stock has a relatively high short interest, 12%. That's not going to make the shorts go away. There's nothing really I'm seeing here. There's certainly some stuff that the bulls can take away, people that are very bullish SoFi, but there's not enough here that if you're already negative on this company, that would make me be like, oh yeah, this company has completely turned the corner. Now, they have plenty of cash sitting on the balance sheet, an acceleration over the previous period. They've taken on more deposits as expected, and this is from December. This is not a year-over-year view. So just in 3 months, they've taken on, what's that, $2.7 billion worth of deposits, maybe a shade over that. They've accrued some debt over the past year, but what's going to make you nervous over at this company is they have all these loans held for, quote, sale at fair value, and there are some people in the banking business that's going to believe that these aren't going to hold their fair value, and they're just going to continue to deteriorate, and the company is going to experience more loan losses. I believe they used to give you cash flows on SoFi. It looks like they've taken that out. I tell you what, analyzing this company from a cash flow perspective, not the smartest thing, or not the thing I would do, because they take in loans, they sell them. That impacts your cash flow as a bank, and it has less usefulness compared to maybe like a tech company or pretty much any other company that we look at. Now, from a technical perspective, if you like volatility, I tell you what I would do with this one is I've actually been in this stock from an options perspective. I've traded it to the short side. I've traded it to the long side. I can't tell you that I've been wildly successful. I've probably made hundreds of dollars trading this stock. But look, the stock's cheap. The options are liquid. The volume is there. Everything is needed, and you've got a lot of volatility. The stock has found a bid historically over the past year or so at about $5 per share. It looks like to me that's where we're heading with this one. If you are to step in this one at the $5, $4.80, somewhere in that range, there are lows obviously down here at $4.25. You would not want to see the stock break that level. You break that level, it means every buyer is gone, and who knows where this one is going. It's probably going to some kind of receivership, if you will, or a buyout, if that's potentially possible. Obviously, they're allowing the consolidation in the banking industry. They've been allowing it for the past 10 years or so. Could be an option for SoFi at some point. But as of the moment that I'm seeing right now, the bears are in control with this stock. The pops in the shares are very short-lived. So if you are a shareholder in this one and you're hoping for profits, I would take at least a portion of them the next time the stock rally. And look, it's going to rally, but the rallies are very short-lived. We're talking about days, if not kind of weeks at the most. This stock tends to rally. I would take profits at those levels because it often comes crashing back down. That was SoFi's Q1. I'm seeing a little bit of recovery during the regular trade. It is about 9:30 a.m. Pacific time as I'm recording this, so who knows where it ends up. There is something for everybody in these results. I am curious to see how these personal loans play out over the course of time. Management explained it well on the call. I don't necessarily think investors believe it, and that's what makes this one an interesting stock. Hopefully you guys enjoyed today's video. Back later this week, we've got AMD and a few other stocks that we'll do videos on. Until then, good luck with your investments.